And welcome to the ETF show. Joining us now is Nick Elward, Senior Vice President and Head of ETFs at Institutional Products at Natixis Investment Managers. Well, Nick, it's great to have you back with us. Why don't you start by telling us about who Natixis is and what you have in the ETF space?
Hi, Jenna. It's great to be with you. Thanks for having me today. Yes, Natixis Investment Managers is a multi-affiliate model of an asset management firm. We run approximately $1.2 trillion across the globe. We're focused on a combination of specialty managers as well as full managers offering a broad suite of different asset management skills. We have central distribution that tells people about what we have to offer within Natixis, and we have investors both in the U.S. and outside of the U.S. As far as the ETF business, we have only active ETFs. That's purely our focus. Right now, our ETF product line consists of 4 products with approximately $500 million in assets. And within that group of 4, we have 2 products that have a value bent, one that has a growth angle, and one that's an options-oriented product. As an example of a few of those products, just to give you a flavor for what that 4 consists of, I'll pull out a few. One is the Oakmark U.S. Equity ETF. It's OAKM, OAKM. We launched it about 6 weeks ago and have over $100 million in assets. It's managed by Bill Nygren, and it's one of those value bent products, and it's been very successful so far and really reaching investors. Another is the Natixis Loomis Sales Focused Growth ETF. LSGR is the ticker for that product. That's about $300 million in assets, more of a growth focus, and run by a team that's a gold-rated Morningstar team according to their metrics, and has done well for investors as well. And lastly, I mentioned options-oriented products. We have one product that does just that. It's the Natixis Gateway Quality Income ETF. GQI is the ticker, and it's focused on providing investors exposure to the equity markets, but with a hedging of about half the allocation and using the hedging income as a way to provide income to investors through SEC yield. So that's a flavor for our product line, Jenna.
Now, Nick, as you look out to 2025, what areas of the market interest you the most?
Yeah, for me, it's definitely the U.S. equity ETF space. We had a strong year in 2024 in U.S. equity ETFs, and I think that 2025 could be an equally strong year. I say that because the U.S. economy looks very strong relative to other parts of the economy, the other parts of the world. The Fed did an excellent job in staving off a potential recession. And then with the recent election of President Trump, he's focused on creating a business-friendly environment. He is interested in tax cuts at the corporate level for sustaining low taxes at the investor level, and then also interested in thinking about ways to mitigate regulation. And then on top of that, you look at the political environment outside the U.S. and his interest in supporting peace in the Middle East, as well as looking at Ukraine and trying to create some peace in the Ukraine-Russia altercation as well. So this sets up well, I think, for the U.S. economy and U.S. ETFs in 2025. And as I think about opportunities in that space, I think 2025, though, could be a challenge in terms of active versus passive. Actually, as an example, just yesterday, we saw Apple stock go down by almost 4% in a single day. And that really hurt large passive ETFs that have high stakes in Apple, a very large market cap product. So as you see more cases like that, active management really makes sense. And I mentioned earlier our ETF LSGR, a growth-oriented ETF. That's managed by an investment team that's been running that product since inception, but running growth investments for Loomis Sales for 15 years, has strong performance, and is well positioned if the U.S. economy remains strong to do very well for investors.
And turning to options, so we've seen some investors seeking downside protection through options-oriented ETFs. Nick, how do these products work, and what are your thoughts on how they can help investors?
Yeah, over the last few years, we've seen more investors become interested in options-oriented ETFs. Over $200 billion flowed into the space over the last few years. And I'm really focused in that space specifically on derivatives income products. They're interesting to investors, whether it be retirees or other investors, They're seeking mitigated risk as well as income. So the way that the products work is that they hold a portion of U.S. stocks in the portfolio. Typically, they write calls on a part of that portfolio, and then the resulting situation is that you get exposure to the U.S. equity market, but at the same time, you get income, typically on a monthly basis, and a lot of investors use that to live on. So an example of a product that does that within Natixis is the Natixis Gateway Quality Income ETF, GQI, and it invests in high-quality stocks based on factor analysis. It writes calls on about 50% of the portfolio, and since its life, it's been able to generate solid returns relative to the equity market, but at the same time also create great income for investors to the point of, or to the level of between 6 and 11% annualized, paid on a monthly basis. So that's why these products are gaining attraction or gaining interest for investors, because they provide that exposure to the equity market, but also a nice monthly income.
Finally, Nick, there's news about something called dual share class or multi-share class that would combine a mutual fund share class and an ETF share class into the same entity. Could you talk about this, and is this ultimately a good thing for investors?
Yeah, Jenna, this is something that, as I think about the product development trends in the space, this is one that is extremely interesting, and a lot of firms are taking notice. So historically, what we've seen is that mutual funds and ETFs have been launched and run off separate entities, and they've never been combined before. And this idea is one that would have mutual fund and ETF share classes off the same entity, allowing for greater efficiencies within the product. So efficiencies could be scale, operational efficiencies, even tax efficiency could be enhanced. So over the years, there's been one firm only that's had access to this technology, this capability. And now we're seeing more firms like Natixis file with the SEC and asking for permission to be able to use this structure in all of our products. So I'm really excited about working with the SEC and with the industry to secure approval for this idea. There are over 40 firms that have asked for this type of approval. And again, Natixis is one of the innovators in the space asking for this. So more to come on this. It's not approved at this point, but we'll see what happens in the coming months, and hopefully there'll be approval. And again, I think that in short, the benefits could be tax efficiency, greater scale, and lower costs. So those are all great things for investors.
Certainly. Well, Nick, always great to have you with us. And thank you to everyone out there watching. Once again, that was Nick Elward with Natixis Investment Managers. And I'm Jenna Dagenhart with Asset TV.